Something I always say is humans can pretty much justify anything. You can talk yourself into buying the worst of the worst stock, some Twitter pump, chat room pump, newsletter pump. I remember getting pumps on the fax machine. That's how old I am. And you can tell by the gray beard. But anyway, you can talk yourself into buying anything. What I want to do in this video is talk about red flags and things you should look for to not trade a stock. Defense wins championships, cash is a position. All right, everyone, be sure to like, share, subscribe, ring that bell to be notified as soon as we drop a new video. And most importantly, check out the StocksToTrade team. Hit that link below. Something that we go over every single day is what's a good setup, what's a bad setup, where do you stop, where do you have a goal, when do you know not to trade? And that's what I'm going to talk about in this video. So that being said, check out the StocksToTrade team below. But there's a lot of red flags we look for, particularly in these morning runners, that dip and rip that you hear me talk about, my favorite morning setup. And what I'm going to talk about today is Dare. Oddly enough, you may think I'm cherry picking, but if you're on pre-market prep every day, 8:30 Eastern on YouTube, if you're in the StocksToTrade team, you know my extreme disdain for this stock, okay? You might be laughing now. I've made all my jokes are bad, but my jokes about Dare are particularly bad. But this stock always spikes and fails, and there's indicators that you can look for. And again, last night, you know, this thing gapped up huge. Everyone wanted to talk about it. I mean, I actually, in pre-market prep, like, I headed it off at the pass. I'm like, I came right out, and I'm like, we ain't talking about Dare this morning. Now, when I was live, gapping up huge, they had some FDA news last night. Everyone was like, Dare, Dare, Dare. And I'm like, we ain't talking about Dare, okay? Because I had, nothing's guaranteed. I can't say with certainty, but with high likelihood, I'm like, this stock's going to gap down, it's going to fade, and you want to ignore it. And look at Dare right now. Closed red on the day. I mean, goes from up 80% in pre-market when everyone wants to talk about it. So plus 80% to red on the day. 0.9% red. Probably gaps down tomorrow. So that being said, let's talk about the things we look for stock to avoid for a dip and rip. Right off the bat, 75 million float. Okay, it's a high float stock. The biggest thing that creates a good dip and rip is a dubious stock, dubious news, but low float. Understand supply and demand. Remember, we've got a ton of videos, blog posts talking about float rotation, but just really quickly, the idea is the lower the float, the lower the supply. Then, when there's great demand, when they drop a press release, when there's an FDA announcement, when there's a pump, okay, that creates a supply and demand imbalance. What happens when everyone wants pens and there's no pens? I mean, we're going through that right now. I mean, as I'm recording, we're in the middle of this supply chain issue, inflation exploding. I mean, who knows? If you check the price of pen, they're probably up like 20% this year. Why? Because everything's so hard to get. That's what happens with float rotation. Something like Dare, odds are it's not going to rotate the float until the end of the day, and you can see it traded 100 million shares. So sure, it did churn through the float, but it took the entire day. We like to look for stocks like an ISIG, which was a glorious dip and rip, 1 million float stock. I mean, it traded the first candle of the day, it rotated the float in one candle. When it broke out on high volume, it rotated the float 4 times in one candle, okay? Closes the day with 70 times float rotation. Traded 70 million shares with 1 million float. So the odds of float rotation, very low on a high float stock. Red flag number 1. Other one, chart history. I mean, one of the reasons I hate this stock so much, this thing spiked. I remember this thing spiking early in my career, okay? Look at every one of these spikes and fails. Now, understand this stock never traded at $100. It's also a reverse split stock. That's also another red flag. Reverse split plays were hot a couple years ago. They probably will come back, but know that right now in the post-2020 world, the reverse split stuff is just, there's just haven't been plays there. So a stock with a history of reverse splits, always a red flag. Look at all of these time frames. The 10-year, the 5-year, the 1-year. Look at this 1 year. Spike, fail, spike, fail, spike, fail, spike, fail. Every time this stock spikes, it closes on the low of the day and gaps down the next day. Chart history tells you that, okay? So those are some of the biggest red flags. Then zoom in and look at the intraday action, okay? So remember, this darker gray area is after hours. This lighter gray area is pre-market. Look at this collapse at 7 a.m. That breakdown is what we do not want to see on the intraday for a dip and rip. What we want to see is it holding near the highs. When this thing collapses at 7 a.m., look at those huge red candles. I mean, that's your death knell. And also from a technical perspective, it breaks last night's support. So last night's support, after it came out of the halt for news pending, it based at 275 all through after hours. When it breaks on that level, now everyone that bought after the T1 halt, the news pending halt, they're all red. So you've got a stock with a history of bag holders that just created another load of bag holders. Now, if Dare was hugging around 3, maybe hugging around the highs, maybe I would have had a different opinion. But when I went live at 8 a.m. or 8:30 a.m., it's sitting here at the low of the day. Looks like it's going to fill the gap to the downside. But still, and this is what I want to save you from. People still were like, what's the buy signal on Dare? And I'm like, there's no buy signal on Dare. This thing is dead as can be, based on lack of float rotation, based on bag holders on the yearly, based on bag holders on the intraday, based on this thing couldn't even get back to VWAP in pre-market. And ultimately, you have a stock in a very dubious sector. Okay, they make these ridiculous female health products. I mean, again, not a hot sector. So there's all these red flags that tell you this stock should be an ignore. Now, hopefully, you watch this video and you're like, I get it. The volume's not there. The float's not there. The chart history's not there. The news is dubious. Bag holders on all time frames. But hopefully, you made it to this point, and these are all, turning on light bulbs for you. So the next time you see a stock that looks like Dare, which will probably be Dare, who knows, you might be watching this video 6 months from now, and it'll probably gap up again, fade, and close red on the day, and gap down the next day. So if I can keep you out of Dare in the coming years, that might make this entire video worth it. But these signs, these signals replicate for crappy, non-ideal trades that, especially if you're under the PDT, you should avoid, especially if you're new, you should avoid. Watch the past videos. I talk about float rotation. I talk about dip and rips. I talk about all these good setups. But if you're not checking all those boxes, avoid, save your day trades. And listen, if you trade a stock like this, you're probably going to take a loss. Maybe you keep your loss small, which is a good thing. That's what you should do. But it's still a loss is a loss. That takes away not only your trading capital, but your emotional capital. I mean, listen, I said it this morning. I'm like, this was my quote. I said, if Dare is the best stock I got, the best idea, I will not trade today. Will not. Because odds are I'm going to lose, I'm going to get frustrated, and I'm going to be like, seriously, Dare of all the stocks, no float rotation, crappy chart on multiple time frames, not a hot sector, and this is the stock you chose to take a loser on? So it drains your mental capital as well. You get frustrated, you revenge trade, you make more mistakes. I think momentum works both ways. That's one of the reasons I preach taking small gains, focusing on green trades, no matter how small. Momentum builds. Now that sword can cut both ways. You keep making bad mistakes, you get frustrated, you get too aggressive, you revenge trade, and you magnify your mistakes. So don't discount the value of staying out of crappy setups from an emotional and mental standpoint. All right, everyone, check out the Steady Trade team. ISPC, another another low float hanging around, gapping up. So anyway, it's wild times, man. Check out the Steady Trade team, subscribe, share with your friends, and we'll see you on the next video.